swing back after a long holiday weekend here in the UAE with the National Day celebrations over the last few days, and now the run into the end of the year. The big news over the weekend seems to be OPEC Plus meeting and rolling over in its decision. Also, today is the big day in which the oil embargo, the EU oil embargo on Russian marine-bound Russian crude oil comes into effect. So a number of factors for the market to digest, and it seems the market is simply saying nothing and remaining in this sort of by using a sailing analogy in the doldrums where there are no wind. Let's kick off as always Monday morning with Omar Najia, global head of derivatives at BB Energy. Omar, your thoughts on the direction of this market, if indeed it has any direction at all?
Well, I mean, I think direction in terms of most probable, I think the market needs to drop before money comes back in on the long side. Is there a possibility that this market basically screams higher from now? Yes, but it would be a sale. So I think everybody's waiting for it to do something. It's like, you have a little, I don't know, cat or some dog or something, you keep poking it to see if it's going to, jump this way, go to the left, go to the right, and it just sits there. You poke it again, it just sits there. So until this market makes a kind of, $10 move either way, I don't think it's worth playing. And I think the market thinks the same. So if this market were to rally $10 a barrel, then it would be a sale. And if it was to drop 10, maybe $15 a barrel, then it would be a buy. But where it is right now, I think the smart thing to do is just wait and see, especially as we come into Christmas. There's no point in taking risk if there's no kind of clear trend, et cetera, et cetera. So wait and see.
Vanda Nahari, founder and CEO of Vanda Insight, sitting in Singapore. It looks like OPEC Plus took the same decision over the weekend. Wait and see. There's two big factors, it seems, Vanda, and I'd welcome your thoughts on also coming into play this weekend. The noise out of China, which seems to be, yes, we're loosening up from COVID. No, we're not. I still am a little bit unclear exactly what they're saying. And the second, of course, is how much Russian oil exports will indeed be disrupted by these latest developments. Your thoughts on those two factors that the market seems to be standing aside watching?
Hi, good morning, Sean, and good to be back. So you pretty much covered the three major factors on the horizon for the markets right now. So one is, of course, the OPEC decision. Then we have price cap, what it does to the Russian oil flows, and of course, what's exactly going on in China. I'm inclined to agree with Omar. I think the market, it feels a little bit directionless for the time being. And the main reason I would say for that is that the price cap, well, they agreed on $60 a barrel, which was about $5 above where Russian oil is actually trading as assessed by some of the major agencies. It really is sort of inconsequential, the whole price cap thing. OPEC did what was expected. At least in the days leading up to the meeting, for me, the surprise element in that decision was that they have laid out the course for the next 6 months. Of course, unless they call an emergency meeting, the next ministerial meeting is actually scheduled for the 4th of June, which is when they would be getting together to discuss July policy. So I see it as of course, it was a safe decision. As you just mentioned, there was a lot of uncertainty in the market, so that was a safe way to play. What's happening in China, I think that is probably going to keep the markets, the broader financial markets, not just oil, on their toes. So yes, you're right, lots of conflicting signals. But if you sort of pass through all of them, my conclusion at least is that China is quite resolutely moving away from its zero COVID policy. I just think it's going to be gradual. There might be false starts. There might be some swift about turns, that might put the market on the back foot. But I think the process has begun. But we'll probably be somewhere in the middle of next year, where we see things starting to normalize. That would be my bet.
Let's go to Yusuf El-Shamamari, the CEO and head of oil research at Sea Markets, senior research fellow at the Imperial College of London. Unlike everybody else, he actually went to Vienna for the virtual OPEC meeting, which was, I would have done the same. It seems a nice time to go to the Christmas markets. But Yusuf, the idea that OPEC is looking to see what happens outside, what happens in Russia, what happens in China, and some of these factors that Omar and Vandana have mentioned. But I think perhaps the biggest question that OPEC Plus is waiting to see is exactly what OPEC Plus is going to produce. Because does anybody know how much of this 2 million barrels a day is actually getting cut? And what is the outlook for that? So I'm wondering your thoughts. What is the internal review of OPEC Plus capacity?
Hello, Sheen. I'm very delighted to come back to Gulf Intelligence. I'm very delighted to join with other prestigious panelists, Vandana and Omar. Well, of course, the decision yesterday was pretty much, in my view, was already priced in over the past week. As we've seen Brent trading around 80 in the 80s, around $85. Of course, here now the uncertainty, as just Vandana said, especially focuses around China. And if you look at of course, the 2 million barrels that were decided to be cut in October, I would have expected to see at least 800,000 barrels to be actually enforced. And of course, Saudi Arabia, if you look at the Bloomberg latest figures, they're showing that Saudi Arabia has made a cut of at least 470,000 barrels, and the whole organization made a cut of close to 1 million barrels. So that's the whole alliance. So I think here, in terms of the cuts, certainly no one would have expected them to make 2 million barrels cut. So all the figures range between 800 to 1.1 million barrels. But here the question is, if no one perhaps even was expecting them to ramp up production, but the second possibility was to make cuts. And of course, I was one of those analysts expecting them to cut further. But here, of course, China has emerged as a key factor, especially over the past 2 weeks. And just yesterday, we're seeing Shanghai and other regions in China easing their lockdown measures. So expecting China to come back over the next couple of months. And that's where the markets, perhaps that will certainly be reflected on global demand for next year. So it is certainly not the right decision to make any cuts right now. And perhaps I would expect them, if China comes fully back economically from now until June, perhaps we can see an emergency meeting happening to bring back some of these 1 million barrels that were cut back in October.
Omar, the other sort of a factor in this market as we come into the end of the year and over the next week or two, we're going to see the central banks meeting with some plans for further increases in rates. The question of where inflation rates and dollar all intersect and their relevance for the markets. Your thoughts as we go into the engineer on those things, Omar?
I think contrary to consensus, dollar up. I don't think the dollar has peaked. So euro and GBP down to parity, euro down to 85 cents. DXY, the dollar index, up to 120 plus. I think inflation goes higher. I think interest rates go higher. I think that, this price cap thing is obviously ridiculous and will do nothing to kind of ease energy prices, but will drive them up higher. The West, as usual, has gone all in. I mean, the West went all in back in March, right? So like playing poker, they got all their chips and they said, sanctions. And now everything's going against them. So again, they've come up with this mechanism, which I don't think is going to do anything to cap oil prices. I mean, if you think about it, if you can do this to Russia, then you can do this to Saudi Arabia or OPEC, or you can basically start sanctioning or capping the price of gold or wheat or you name it, right? So if you think about it, we've gone just a big kind of picture. The West has gone from, you know, we have the rule of law and you can't like kill people without a warrant or arrest or whatever. And then we've had like drone killings and imprisoning in Guantanamo. And then we said, you know, we believe in the market. The market is it, free market, blah. Then we have this. And then we, you know, everything that the West has said that it is are basically sacrosanct stuff. Like, we love the planet, it's green, we have to all be green. And now they're burning coal. So literally, the message is, you know, we say this stuff, but we mean none of it, absolutely none of it. Because, you know, so if I was, you know, China, if I was India, if I was Brazil, if I was Africa, if I was anybody else apart from the G7 and, you know, the kind of, you know, Australia, New Zealand, whatever, I'd be worried, because this seems to be like the last kind of play that the West has. It was supposedly that the West can control the price of oil by controlling OPEC politically, you know, pump more, pump less, because our economy is going up or going down. And then they came up with, you know what, we'll do shale, because money was worth zero. So they invested billions to make millions, but they tried to gain control of the market. That failed. So then they said, you know what, we have to be green, because if you're not green, we're going to tax you. So that's the way we'll control the oil market. And that failed. And now the latest one is we're going to cap the price. And I'm telling you, like the sun will come out tomorrow. It's already failed. It's smoke and mirrors. The fact that they set it at 60, or first of all, Russia's not going to participate. So you can forget about it. So this kind of stuff is all like, you know, we're going to do this, we're going to do this, we're going to do this. But I think the world moves on and prices go higher, inflation goes higher, and they're going to, you know, squeeze those little cherries until you start seeing them scream one by one. And I think it's going to happen.
Vandana, the price cap, the embargo, EU embargo, and so on, more than the price cap, but the embargo and the whole insurance aspect around shipping. India has come out over the weekend to say that they were going to continue with their actions this year of importing Russian oil. They won't be complying with these new conditions. Your thoughts on where that goes, and what's, you know, once we get into one of these moments of, you know, this is now law in country X and so forth, where do you think India goes with this?
It stays exactly where it was. And, you know, just further to what Omar was saying earlier, there is a concern amongst OPEC member countries, obviously, that we could be next in terms of the US deciding to cap our prices. Similar concern exists in every sovereign nation. So if you look at China and India, they're going to say, even if we were to sign up for this price cap thing now, what, you know, that just sets a dangerous precedent for us in future, right? The next time they come to us and say, we tell you how much you may pay for this crude import from this country, you know, then how can you say no? So there's a very, very good reason for those two countries. And frankly, I really can't see any other. So there's been talk of maybe Malaysia, Indonesia, Pakistan emerging as buyers. And of course, they'll negotiate. They'll try to extract the maximum possible discount from Russia. And I would argue that the discount will probably increase now, because Russia has the same number of barrels to offer to a sizably smaller market. So they will do that. But I don't think there's any reason for the countries, the incentive to sign up is not there. The disincentive on the other side is very much there, because unless all these countries operate in a united way, and I just don't see China and India, you know, talking to each other and saying, yes, you know, both, if we do, then both of us should sign up for it. That's not going to happen. So unless they operate in, you know, together in cohesion, Russia is going to play one against the other. It's going to refuse to sell oil to the country which is trying to implement a price cap. So, yes, Omar says, I think Omar says this was dead on arrival. I think what they have managed to achieve, to give them credit, the EU, is they have saved face. They said they will do this, and they have gone ahead and managed to forge a consensus and a figure that is not completely out of this world. It's not exactly a cap, as long as it's above where Russian crude is trading. They managed to save face. They're certainly not going to achieve the intent of squeezing Russian oil revenues. If they were looking to save their shipping and insurance industries from the hit they will take of losing a chunk of their business, that has also not been achieved. But, the world will go on. And
I mean, it is worth noting that this was not a European idea. The price cap came from Washington, from the Americans, who, in essence, were trying, from my sense, to sort of dull the impact of the EU embargo on Russian crude, and the Europeans have digested it. Yusuf, but all said and done, I mean, you could bang us against the wall. The price caps are relevant, more or less. Your thoughts on what is relevant for OPEC Plus? It seems to me that perhaps China is the biggest unknown, the biggest thing to keep an eye on, or not. What do you think is the main sort of thing that they'll be watching in order to, deter from the current course of action?
Well, Shane, certainly I've always been expecting China to be the biggest factor for OPEC Plus. Regarding the price cap, I just see it as a political decision that will have no tangible effects. That's because, as just Vandana said, the discounts that Russia is actually making right now on its crude is much bigger than the cap itself. And also the unity among EU nations to come on that price cap has been quite a challenge. Of course, still Ukraine is calling for a price cap on $30, pretty much close to the cost of production. But certainly that's not going to happen. But so essentially,
well, it's the only one that may. And personally, not that I'm saying I'm in favor or not about it, but if you're going to do something, you would think $30 would be the thing to do. At least it has some indication of relevance, even if ineffectual. 60 is just sort of a nothing burger.
Yeah, so I would expect Russia to continue supplying Europe with oil, despite the threats that were made by Novak yesterday that they will stop supplies on those participating countries, because it still look attractive. So still an attractive deal. So on the China side, certainly here, it's still a big uncertainty, but I would expect China to have some sort of ease on the economic activity. So next year outlook for China was something around 4.4% growth. So that could go up to perhaps 5% with easing and its lockdown measures, and perhaps we could see some more oil that needs to be ramped up from OPEC Plus, especially from Saudi Arabia, perhaps a 500,000 incremental return from these cuts that were made. But also here, another important factor is the Federal Reserves. And I believe yesterday's decision was good news for the Fed because it's trying to control inflation. So perhaps oil market, we won't see $90 for now. Perhaps we're going to see the 80s. But the other good news is also, if you look at what the tweet that came from President Biden, which somehow sends a signal that they are happy with OPEC Plus decision, that oil gasoline prices are down over the last 173 days with $1.6. So I guess the decision yesterday made everyone happy. But how would that develop over the next few months? That's still, I guess, China here will be the biggest factor. I don't think the price cap will really have an impact for OPEC Plus to rechange its policy.
No, Omar, it does feel like the no action of OPEC Plus, or the no change of the price cap, that this market has been in a very significant downward draft since the OPEC Plus decision in early October. We did have that initial rally based on the idea of OPEC Plus raising or cutting supply and so forth. But we've had this very downward draft. It was only stopped last week when there was reports that the OPEC Plus might actually cut further. As Yusuf said, he was one of those that was advocating that as a possible outcome. It was also from other corners, but nonetheless, the OPEC Plus signaled that they would cut further, and so prices stopped falling. And I'm wondering from your perspective of the two sort of possible outcomes, 10 up or 10 down, which do you think is more likely? Does the downward draft continue, basically, is my question to you, Omar.
And it's a very difficult question, but yes, gun to my head, 10 up or 10 down. Even though I'd like to see 10 up, I think 10 down. But it's very probability wise. It's really, honestly, in my view, it's like 50-50, 60-40. So it's not worth a bet. But the other thing I wanted to tell you is, I think the people that are going to set the price of Russian oil at $30 or below is in fact Russia, because what people seem to forget, and what people, because ideas are ingrained and people are used to the same thing. So they think that, OPEC Plus is just going to do what they always do, and Russia is just going to exactly blah, blah. So I think basically what Russia's doing is called strategy, which I think is a difficult concept to explain to people like, the US and Europe and all this kind of stuff. So strategy means that they have said already that they're going to stop supplying oil to anybody who does the cap. Now, they also said that they're going to do the same in terms of gas, piped gas, not LNG. And I think they're going to do exactly that. I think they're going to not supply, not just Europe, but not supply. They're going to do like one of these contracts that Aramco used to do, which is like destination reliant. In other words, we will sell you the oil, but you have no right to sell the oil to any country that has or done, accepted or used or will accept the price cap mechanism. So I think basically that this is something that the market doesn't understand. And I have never seen Russia say stuff that they haven't done. So do I think that Russia wants NATO to go back to 1997 borders? Yes. Do I think they will achieve it? Yes. Do I think basically that NATO will, break down? 100%. Do I think that the EU has massive issues? 100%. Do I think that the US has massive issues and the economies of the West are going to be in for a drubbing? 100% yes. Do I think that things will continue as they are by some guy who basically cannot read a teleprompter, sending a tweet and saying, "Yeah, we're happy, blah, blah"? I honestly don't think that Biden, from just seeing him, not from being a medical doctor or anything like that, but last time I saw a video of him, he was talking with a microphone, and then he walks off the stage with a microphone. He can't even walk. So the idea that he's kind of tweeting something and saying, we're happy, whatever, I don't think he has any idea. I think the most difficult question he has to answer is vanilla or chocolate ice cream. But apart from that, you can forget it. So when I see this kind of stuff that says, he's somehow, directing or negotiating or whatever, I think that's rubbish. So I think there is no negotiation. I think there is no strategy to do with the US, which is the leader of the West. Therefore, no strategy for the EU, whether it be militarily in Ukraine or economically with oil or any of this stuff, which is why we keep seeing, people, Vandana was saying face saving, but it's ridiculous. This stuff, this invested time and whatever to come up with something basically that's ridiculous. And everybody says it's ridiculous. I mean, there's no strategy there. There's no brain behind it. It's basically a rudderless ship.
Okay.
So that's basically
a rudderless, brainless ship sailing into the night. Let's go to the survey question and see if there's any brainless, rudderless people in this room. When all is said and done, will Brent crude oil be closer to $90 or $80 at the end of the year, which is obviously only in a few weeks from now? Not that there's a huge difference, but nonetheless, there is a big difference in the direction of travel. And as I said there earlier, Vandana, the direction of travel was clearly towards $80 before the sort of noises about the OPEC Plus meeting took place. And it has paused, it seems to me, that downward draft. I wanted to get your insights on that in the context of we've moved from what was a very strong narrative of demand destruction in early mid-November before the OPEC plus meeting noise started. So now we've come back into the room of supply concern noise. I'm wondering, is that a temporary pause till we get back to demand destruction noise, or will supply concern noise last through the end of the year? Your thoughts on that?
So I think I'd like to call it demand erosion rather than destruction. I didn't really see any signs of a huge slump in demand happening. So demand erosion is, I think, a narrative that stays very much with us, potentially through 2023. I think, again, I'm not with the extreme Fed pivot euphoria party. I think the Fed will have to continue tightening. And as Omar says, if there is no leadership to try and bring Putin and Zelensky and EU back to the negotiating table, and let's face it, it would have to come from the US, right? There is no leadership. So we can assume, and at least that's my base case, that the Ukraine war continues to fester through next year. So, we are in that same sort of circle of supply chain problems, in stubborn inflation, and banks continue to raise interest rates. So an economic downturn is going to bring demand erosion along with it. As for supply concerns, I think the single biggest one was what might happen, or what's the worst that could happen to Russian oil supply with all the EU sanctions and whatnot, and especially with two major buyers refusing to join the price cap coalition. But I think in recent months, and certainly more so in recent weeks, it's become very clear to the market that alternatives are available to these buyers and any other buyers that emerge for Russian crude. So shipping alternatives they may not be ideal, but shipping alternatives and insurance alternatives are available. So I really don't see why one would have supply concerns that dwarf demand worries at this point. Of course, you always have that tail risk in the market of, when 1 million barrels per day could get shut off in Libya anytime. And, similarly in Nigeria, force majeure at the drop of a hat. So those risks will remain, of course, but I don't see a sort of sustained supply shock as such. So my view is a steady, albeit gradual, downward drift in prices.
Let's go to survey result to give Yusuf the last word this morning. Closer to 80 than 90 is the view in the room. We'll post that survey question on Twitter, as we always do. Your thoughts on the same question, Yusuf? Obviously, as you were forecasting or sort of guiding earlier in the month, the idea that deeper cuts may be needed. I'm wondering where your views on that are now with that same question. Do we return to demand erosion, destruction concerns, overwhelming supply concerns?
Sheen, the couple, over the past month, we've seen some changes and demand movements, as we just said, from China and also the Federal Reserve, because we used to see the Federal Reserve continuing its strict monetary policy and tightening interest rates, stronger dollar, and also the outlook on the economy was a bit gloomy. So I think that perhaps could have created a change in the OPEC plus policy. If we just saw it just last week, there was a meeting between the Saudi energy minister and the Iraqi energy minister, and the two have kind of agreed that there could be that the group could take further measures. So all the indications were kind of including the possibility that further cuts can happen. But I think yesterday's meeting showed that there is some sort of change in the policy. And I wouldn't be surprised if they add more supplies in 2023. So especially if China comes back and we see more easing on the lockdowns coming from China. So if that continues and we see China coming stronger, and also the Federal Reserve, especially in the US, hikes up by 50 basis points, then certainly I think it's time for OPEC Plus to bring back some of the 2 million barrels that were cut back in October.
So increase rather than cut
Yes.
would be the next likely move. Just to follow up on that, Yusuf, the Chinese president is visiting Saudi Arabia in the coming week, first visit in 6 years. Given what we've been talking about or beyond that, outlook for that visit?
Well, of course, the visit here, perhaps oil markets is certainly important for any bilateral international visits and president coming to Saudi Arabia. But here, there's much more than that, because as you know, Saudi Arabia is leading the Arabs in terms of opening and consolidating relations with China, especially in terms of economic diversification. And China is a major partner in terms of achieving that economic vision led by the Crown Prince. So here, I think Chinese companies will have a strong, or will explore and find strong opportunities to explore an energy transition, hydrogen, ammonia, solar energy, and especially in the kingdom. China is an important partner in terms of oil. So China gets at least 1.5 million barrels of oil from Saudi Arabia a day. Sometimes with favorable prices, and I would expect them to continue becoming an importer of Saudi oil for at least 20 years to come, because China is pledging to become net zero by 2060. So you can see the important trade relations between the two, and I believe here the relationship or the visit of the Chinese president will focus on expanding these already established oil relations into other sectors that include the economy, the culture, and especially that can achieve the Crown Prince Vision 2030.
Yeah, clearly a very, very big building relationship there. And what are its greater geopolitical consequences, if you like? We'll have to wait and see around all things security and otherwise. But in the more immediate term, we do have Brent crude oil, as we said at the beginning of our discussions, trading a little higher out of Asia this morning. I think there's a lot to still happen here. There's been a lot of things over the last few days at a period in which the US has been in a holiday weekend with Thanksgiving, and now we're kind of coming through that and coming into the beginning of the week. It'll be interesting to see how things open up in Wall Street and in the financial markets as the US markets reopen ahead of the holiday season. So the window of direction here is probably rather small, but nonetheless, the US markets coming back into full flow this week will give us some direction as to how they're digesting all of these developments. Vandana, thank you so much. Great to see you. Omar, as always. Yusuf, great to have you, and happy holidays there in beautiful Vienna. I hope you have a chance to get around to those markets.
Sure.
We should all enjoy a bit of that. Have a great day. Catch up every morning, 10:30 UAE time. Thank you.